Okay, testing 1, 2, 3. I'm trying to get my streams up on Twitch and on YouTube. Okay, seems like we're live. I want to make sure everybody can hear me okay. And you can see my chart here. Ken Krager from Black Swan Financial Advisors. Again, let's start off with my disclaimer, which is that all my videos, all my documents, my website, everything is for educational and informational purposes only. This is not individual investment advice. So if you want to talk to me about different things, then I have licenses and so forth, but for these purposes, since I don't know who's watching, it's just for educational purposes, and it's kind of a broader discussion of different topics. So this is the first part. I don't know how many videos I'm going to end up doing, and I'm actually developing a course about strategies around 401k, 401k Roth. Some of you might not realize that many employer 401ks have a Roth option. IRAs, traditional IRAs, and Roth IRAs. Roth IRA conversions are converting or moving money from a traditional 401k or IRA to a Roth. All those type of strategies. So I'm going to develop a course. There's actually a lot of material. The recent tax law changes that were signed into law in December made some changes to especially how Roth IRAs and 401ks can work, and has actually allowed everybody to put away more tax-free money savings. So I thought this is really important, and we're just going to, it's the end of January. It's January 31st, and it's tax season. I just got my W-2s and my 1099s and all that, so I felt it very appropriate to talk about taxes, and especially since the current tax rates or the tax brackets are actually pretty favorable compared to historical tax rates. And all the political maneuvering to try to increase tax rates and tax the rich and everything. And unfortunately, it seems like today anybody that has more than $100,000 is considered rich. It's also appropriate that there's a fight brewing in the government over the debt limit, and the fact that our debt. The debt is 125% of GDP. Our debt is more than our country generates in revenue or economic productivity. And as rates have gotten higher and higher, pretty soon the single biggest payment that the government makes will not be on defense. It won't be on Social Security. It won't be on government programs. It will be to pay the interest on the debt. That's messed up. Okay. So I don't have any faith that the government will get their act together. If I was a betting person, I would say 5 years from now, 10 years now, 15 years from now, my taxes are going to be higher than they are today. So as you can see, this was actually the tax brackets for married taxpayers when the 2018 tax cuts took effect. And in 2026, if the government doesn't raise our taxes even higher before then, what will happen in 2026 is that those 2018 tax cuts will go away, and you will all be able to man, I need to start over. How depressing. I was really on a roll. I was streaming, but I wasn't recording. I need to record this video. So anyway, Ken Krager from Black Swan Financial Advisors. We're going to talk about taxes. And then we're going to, this is the beginning of a series where I'm going to talk about 401ks, IRAs, Roth 401ks, Roth IRAs, and strategies for saving money on taxes. And my disclaimer, of course, is everything on this website, everything in this video, everything that I'm doing, unless you're talking to me in person, is for educational and informational purposes only. This is not investment advice, and actually this is very generic financial advice, and we're not going to talk about specific investments or anything at all, actually. So anyway, we're going to talk about taxes. It's the 31st of January. I just got some W-2s and some 1099s. There's a big fight going on in the government about the debt limit. And some of you might not realize that our debt is 125% of the GDP. What that means is our debt is more than the country makes in revenue. It's more than its economic productivity. And if we keep going down this route, pretty soon the single largest payment that the government will make will not be defense. It will not be Social Security. It will be interest payment on the debt, because we can't default on the debt. The government can't default on the debt, or man, there would be economic chaos. So I'm betting that taxes are going to be higher 5 years from now, 10, 15, 20 years from now. But you can see by this chart here that the taxes were quite a bit higher before 2018, and even if the government does nothing, those tax cuts were not permanent, and they will revert in 2026. So right now you have about 2 months to do a Roth conversion. And so that's why I wanted to talk about it right now, was because you have a limited time this year to maybe do a Roth conversion. And you could do a Roth conversion for 2022 and a Roth conversion for 2023 and save a significant amount of money. So one of my favorite sayings, one of my friends talked about, is often there is more money in not losing money than in making money. In other words, if I could save you 10% of your taxes, wouldn't you say that I made you 10%? So the interesting thing about that is that 10% gain didn't depend on market returns. It didn't depend on the performance of a stock or a bond or whatever. It actually was keeping more of your own money that you made and not giving as much to the government, but you actually made 10%. And 10% is quite a bit more than the long-term average of the stock market even, right? Which is 6.5% or so. So if you could do 10%, I made you a significant amount of money. So anyway, if you want to talk, get a hold of me. Black Swan Financial Advisors. Go to blackswanfinancialadvisors.com. I'll put a link in the video. So let's talk about these taxes for a little bit, and then I'll do some more videos specifically on 401ks and IRAs and strategies to maximize your tax-free savings and your tax-free investments, so that you don't give Uncle Sam as much money. So, for example, if you were getting, say, $200,000 a year of income, and you could take $100,000 of that from a tax-free source, then you would only be taxed on $100,000. So you'd be in a 22% tax bracket. In 2017, you would have been in a 33% tax bracket. So I just saved you 11%. So anyway, right now the taxation laws and rules are pretty favorable. I mean, look at that. You can have a combined married income of up to $400,000 and get pretty favorable taxes. I think the biggest bang for the buck would be up to $315,000. So I would encourage you, you can talk to me and I can help you, walk you through this. But if you have an income of, say, $200,000 and you have money in an IRA or a 401k or something that you could actually roll over, you might consider rolling over $100,000 of it, paying 24% tax, because in the future you're very likely to pay 33 or 35% tax on that money. So anyway, that's that's a strategy that you can think about. So you only have a limited amount of time to do this, and I would encourage you, as the government fights over the debt ceiling and everything, take control of your own financial future, secure your own financial future. I specialize in helping develop financial plans and working especially with families who have children with special needs, where they're going to have to plan for their own retirement, as well as being able to take care of their loved ones, 30 plus years after they die. You need to plan so that their legacy plan doesn't disqualify their loved one from government benefits and stuff like that. And there's a whole bunch of considerations. So, where are you going to get money for health care? Where are you going to get money for your own retirement, and then secure a financial future for your loved one? And one of the keys to that legacy planning and maximizing the return for your loved one has to do with trying to get as much money as you can into a tax-free bucket, for lack of a better word, because the estate, the trust, the special needs trust, especially your estates get taxed at the highest tax bracket. Okay, when you're alive, they get just included at your own level of income. So like, I have a special needs trust. My daughter Addie has Down syndrome. Say, I have $100,000 of income. I'm in the 22% tax bracket. But when I die and I pass on, if the trust has $100,000 of income, it would get taxed at 37%. Okay, so if I can help you with that, I just made you 15% on your money. That's huge. That is huge. So anyway, there's strategies for only a few ways for you to try to put as much money in these tax-free buckets as you can. So anyway, stay tuned. We'll talk more about 401ks. We'll get into that. Roth. There's some laws that were signed into law in December of 2022 that are very favorable for increasing the amounts of money that you can put into Roth 401ks, Roth IRAs, and there are some strategies that you can do to actually kind of in flight move money from a traditional 401k into a Roth 401k and not have any tax consequences. And, a lot depends on your employer 401k plan, but the law's changed. And so we'll talk about that. And I'm going to do a course that, we can walk you through that and help you figure out what you can do so that you can make 10 or 15% more on your money. And you don't have to pick a really good stock to do it either. So anyway, again, Ken Krager from Black Swan Financial Advisors. This is for educational purposes only. Stay tuned for the next part 2 of this particular topic, and we'll see you later. Thanks. Bye.